Welcome to our companion podcast on important family business matters, Family Business Briefs, with our AI hosts, Jen and Ted. The content in these episodes comes directly from Family Enterprise USA and can be found at familyenterpriseusa.com. As we all know, many issues like taxes, economic policies, and new legislation affecting family businesses are complex. So, with the assistance of AI and our AI hosts, Jen and Ted, this technology helps make sense of it all in a brief, clear, and lively discussion, and all in about 10 minutes. We hope you find the information presented here useful and entertaining. Now, let's listen in on this episode's important family business topic.
Welcome back, everybody. This time, we're going to be diving into the world of family businesses.
Oh, yeah.
And looking at what the new year could have in store for them, especially when it comes to taxes.
Big one.
Yeah, you sent over this really insightful article with some whispers straight from Capitol Hill. Are you ready to try to decipher some serious tax policy together?
Absolutely. I think family businesses are potentially facing some really big changes in the next 100 days.
Yeah, this article really jumps right into the buzz in D.C. about the new administration's tax plans.
Yeah.
And it sounds like they're in a race against the clock to try to pass a new tax bill that has a laser focus on these family businesses.
Well, the article really stresses the first 100 days for the new Congress.
Right.
A lot can happen in that time frame.
Yeah.
The main goal, it seems, is to extend or potentially even expand upon the 2017 Tax Cuts and Jobs Act.
Okay.
And the TCJA.
Yeah, for those of us who need a quick refresher,
Sure.
what was the TCJA trying to achieve back then?
Well, the TCJA was a really sweeping piece of legislation.
Okay.
And its main goals were to try to simplify the tax code, lower tax rates for businesses and individuals,
Okay.
and of course, stimulate economic growth.
I remember that being a big deal at the time.
Huge.
And this article is suggesting that if these TCJA provisions aren't addressed, things could revert back to how they were before.
Yeah, that's right. We could see individual tax rates and brackets go back up.
Okay.
Standard deductions and child tax credits get cut in half.
Wow.
Estate tax exemption would drop back down to $7 million. And then on top of that, the 99A deduction and R&D expensing would expire.
Whoa. Okay, so let's unpack some of that.
Sure.
You mentioned the 99A deduction expiring.
Yeah.
For somebody who doesn't think about the tax code all day,
Uh-huh.
what's the significance of that,
Yeah.
particularly for family businesses?
Well, the 99A deduction is particularly important for businesses that are structured as pass-through entities.
Okay.
And according to Family Enterprise USA,
Almost 80% of family businesses are set up this way.
so the vast majority of family businesses are operating as pass-through entities.
Yeah.
What makes this 199A deduction so crucial for them?
Essentially what it does is it allows owners of these pass-through businesses to deduct up to 20% of their qualified business income.
Okay.
And this can significantly reduce their tax burden.
So potentially losing that 20% deduction
Right.
sounds like it could be a big hit to a lot of family businesses, bottom line.
Absolutely. And then also losing that R&D expensing provision
Right.
could also discourage innovation and investment in new technologies.
Yeah.
So these are definitely things that family businesses are watching very closely.
This article points to Representatives Greg Steube and Claudia Tenney, both from the House Ways and Means Committee,
Yes.
as being really key players in this whole tax saga.
Yeah.
And it makes me wonder, how likely is it that Congress is actually going to get these TCJA provisions sorted out in time? Well, Steube seems pretty optimistic,
Okay.
He's quoted as saying they have a year to finalize these policies and that they will succeed.
Okay.
Historically, new presidents often manage to get tax bills through in their first year.
Right.
So,
But making these provisions permanent,
right.
or at least, improving them,
Yeah.
seems like a pretty ambitious goal.
It won't be a walk in the park, that's for sure.
Yeah. Is that realistic, do you think?
Well, I mean, there will be plenty of debate and negotiation involved.
Right.
But you also have to keep in mind that Representative Tenney
Yeah.
is an active co-chair of the Congressional Family Business Caucus.
Right.
So her voice carries a lot of weight on these issues.
Yeah, that's a good point.
It
seems like both Steube and Tenney are pretty determined to see this through.
Yeah.
Steube especially seems committed to keeping all the TCJA provisions intact. And he particularly calls out that 9998 provision that we were just talking about,
Right.
and that research and development expense provision.
He sees those as being essential for, supporting entrepreneurship and economic growth.
Yeah.
especially among those family businesses.
And it sounds like there's even more on the table.
Oh, yeah.
This article mentions talk of eliminating taxes on tips and overtime pay,
Right.
which just seems like a significant change.
It is a big one. And, we can't forget about the potential elimination of the wealth tax.
Oh, right.
Which is a tax on unrealized gains.
Okay.
The article quotes Stubbe as saying, this tax will go away regardless.
Wow, he doesn't mince words.
No, he doesn't.
What's the rationale behind wanting to get rid of that tax?
Well, the argument against the wealth tax is that it unfairly penalizes individuals for assets that haven't actually been sold or realized.
Oh, so you could be taxed on something that hasn't generated any actual profit yet.
Exactly. And critics argue that that disincentivizes investment
Yeah,
and hinders economic growth.
that makes sense, but I'm guessing there's another side to this story.
Oh, absolutely. Proponents of the wealth tax argue that it's a crucial tool for addressing wealth inequality
Okay.
and ensuring that the ultra-wealthy contribute their fair share.
So it's kind of a classic tug of war
Exactly.
between fairness and economic pragmatism.
Yeah, and it's a debate that probably is not going to be resolved anytime soon.
It sounds like it, and it looks like Representative Tenney is on board with a lot of these proposed changes, too,
Right.
especially when it comes to making those TCJA provisions permanent.
Yeah, and she seems particularly focused on the estate tax.
Mm-hmm.
The article even mentions that she's optimistic
Okay.
about getting these changes through,
Mhm.
given the Republican majority in both the House and the Senate.
Right. But it also mentions that she plans to work with Democrats on these proposals.
Yes.
So it'll be interesting to see how that collaboration kind of unfolds
It would.
and if they can find any common ground.
Absolutely. It seems like there's always a degree of uncertainty when it comes to DC politics. Right. And this article even hints at some other intriguing tax proposals
really?
that the Trump administration is considering,
Okay.
like lowering the corporate tax rate to 20% or even 15% for domestic manufacturers.
Wow, that's a big cut.
It is.
And then there are those tariff proposals,
Yeah.
a baseline 10% tariff on all imports,
Mm.
and a 60% tariff on goods coming from China.
That's a big one.
Wow. And they're even talking about using that tariff revenue to create a sovereign wealth fund.
A lot to unpack there.
It all sounds pretty enticing for businesses,
Yeah.
but cutting taxes usually means bigger budget deficits.
Yeah.
How are they planning to make up for that lost revenue?
That's the million-dollar question.
Yeah.
The article suggests that they might reassess how the Office of Management and Budget calculates economic growth.
So tweaking the way we measure economic growth.
Potentially, yeah.
Interesting. It sounds like they're aiming to generate enough economic activity to kind of offset that revenue loss from the tax cuts.
Yeah, that seems to be the strategy.
Okay.
But it will be a point of contention for sure.
I bet.
And a lot of scrutiny, I'm sure.
So we've got tax cuts,
Mm-hmm.
potential tariffs,
Yep.
a possible reshaping of how we even measure economic growth.
Yeah.
It's a lot to take in. What stands out to you so far?
Honestly, what I'm most fascinated by is this idea of making the TCJA provisions permanent.
Yeah.
That's a big deal, especially for family businesses.
Right.
I think it'd be interesting to kind of dive deeper into those specific provisions and see what kind of impact they could have on different types of family businesses.
I agree. I'm particularly curious about how those in certain industries,
Mm-hmm.
like manufacturing or agriculture,
Yeah.
might be affected.
Uh.
Could they see even bigger benefits, or are there specific limitations they need to be aware of?
Those are great questions, and it's important to remember that not all family businesses are created equal.
Right. Some might benefit more than others, depending on their industry, their size, their structure. We should explore that further, for sure.
I also think it's worth considering how these potential changes might ripple out and affect the broader economy.
Yeah.
Will we see that intended boost in growth and investment, or could there be unintended consequences?
Right.
Like, widening wealth disparities.
Yeah.
Or even larger budget deficits.
Those are some big questions.
They are.
It feels like we're on the verge of some major economic shifts.
Yeah.
And it's important to understand how they could impact not just those family businesses,
Right.
but the economy as a whole.
That's what makes these deep dives so fascinating.
Yeah.
We're not just looking at the headlines. We're really digging into the potential implications and considering multiple perspectives.
Yeah. I'm already starting to see the bigger picture here.
Yeah.
And I'm definitely feeling more informed about what could be in store for these family businesses in the coming year.
Good. I'm glad.
Ready to delve a bit deeper into some of these specific tax provisions.
Let's do it. Where should we start?
Well, that 199A provision seems like a major point of contention
It is.
and a potential benefit for so many of these family businesses. It would be helpful to break that down a bit further.
Right.
And see exactly how it works.
Sounds good to me. And while we're at it,
Yeah?
let's take a closer look at that wealth tax.
Okay.
Explore those arguments for and against its elimination.
Mm-hmm.
That's a topic that is sure to spark some lively debate.
Agreed. Let's dive in. All right, so let's unpack this 190A provision a bit.
Okay.
You mentioned earlier that it's a game changer for a lot of family businesses, especially those that are structured as pass-through entities.
Right. So the 99A provision,
Okay.
which was part of that big 2017 Tax Cuts and Jobs Act.
Right.
The TCJA we talked about allows owners of pass-through businesses to deduct up to 20% of their qualified business income when they're calculating their federal income taxes.
Okay, so instead of being taxed on their entire business income,
Right.
they get a pretty significant break.
Exactly. And for a lot of small and medium-sized businesses, this can make a really big difference.
Yeah.
And, you know, it's one of the reasons Representative Stubbe is so adamant about making this provision permanent.
Okay.
He sees it as a way to kind of even the playing field between those pass-through entities and corporations.
Because corporations already have that lower tax rate.
Right. The corporate tax rate was lowered significantly under the TCJA.
Okay.
So this 199A deduction helps to bridge that gap a little bit and make the system more equitable for those businesses regardless of their structure.
That makes sense. But how does this deduction actually work in practice?
Sure.
If I'm a family business owner,
Yeah.
what do I need to know to qualify for this? Are there any catches?
It is a bit more nuanced than just a straight 20% deduction for everyone.
Okay.
There are certain income thresholds and limitations based on the type of business. You know, the specifics can get pretty complicated, but the main goal is to provide that targeted tax relief for the kinds of businesses that really drive our economy.
Right. I can see how navigating those specifics could get pretty tricky,
It can.
especially with all these other potential changes kind of floating around.
Yes.
Speaking of potentially tricky,
Yeah.
let's shift gears to the wealth tax.
Okay.
Sounds like that's another hot button issue.
It is. It's definitely been generating a lot of buzz lately.
Yeah.
And as we mentioned, Representative Stubbe seems pretty set on getting rid of it.
Yeah, his comment about it going away regardless was pretty strong.
It was. And that really reflects the view of many who feel that a wealth tax is fundamentally unfair
Okay.
and could have those negative consequences for the economy as a whole.
But before we get into those arguments, can we just quickly define what we're talking about
Of course.
when we say wealth tax?
Yes. So it might sound futuristic,
It does.
but the concept is pretty straightforward. Essentially, a wealth tax would levy a tax on assets that haven't yet been sold or realized.
Okay.
So instead of just taxing income, it would tax the total value of a person's assets,
Okay.
even if those assets haven't generated any actual profit yet.
So, for example, if I own a valuable painting,
Yeah.
but I haven't sold it,
Right.
I could still be taxed on its estimated value,
Exactly.
even though I haven't actually made any money from it.
That's right. And that's one of the main points of contention.
Okay.
Critics argue that it discourages investment
Right.
and could stifle economic growth.
Yeah.
The idea is that people would be less likely to invest in assets if they know they're going to be taxed on the value before they even realize a profit.
I can see how that could create some hesitation.
Yes.
But I'm guessing there's another side to this.
There definitely is. Proponents of the wealth tax argue that it's a necessary measure to address wealth inequality.
Okay.
They say it's a way to ensure that the ultra-wealthy, whose wealth often comes from appreciating assets,
Right.
rather than traditional income,
Okay.
contribute their fair share to society.
So it's a classic tug of war
Exactly.
between fairness and economic pragmatism.
It is. And it's a debate that likely won't be resolved anytime soon.
It sounds like it.
Yeah.
Well, I'm glad we at least have a better grasp of the arguments on both sides.
Me too.
Now, shifting back to those potential changes
Okay.
that could directly benefit these family businesses, what else is on the table besides the 990A provision
Yeah.
and the possible elimination of the wealth tax?
Well, the article mentions a few other interesting proposals.
Say.
For example, the Trump administration is considering lowering the corporate tax rate even further.
Yeah.
It's currently at 21%, but they're talking about bringing it down to 20% or even 15% for domestic manufacturers.
Okay, so potentially even bigger tax breaks for corporations.
Potentially, yeah.
What's the thinking behind that?
Well, the idea is to make American businesses more competitive on a global scale and encourage more investment in domestic manufacturing.
I see. So it's about stimulating growth by giving businesses more of that breathing room.
Yeah.
But doesn't that also raise concerns about budget deficits?
Absolutely, it does. And that's something policymakers will have to grapple with.
Right.
But it seems like they're banking on the idea that the economic growth spurred by these tax cuts will eventually offset those revenue losses.
It's a gamble.
It is a gamble.
For sure. And speaking of gambles, what about those tariff proposals? That's not pretty dramatic.
We're talking about a baseline 10% tariff on all imports.
Okay.
And a whopping 60% tariff on goods coming from China.
Whoa, that could definitely shake things up.
It could.
What's the rationale behind imposing tariffs like that?
Well, the stated goal is to protect American industries and jobs from foreign competition.
Right.
But it is a controversial move, to say the least.
Yeah.
Critics worry that it could lead to higher prices for consumers, harm businesses that rely on imported goods, and potentially even spark retaliation from other countries, leading to a trade war.
Trade war, yikes. That doesn't sound good for anybody.
It doesn't.
It seems like there's a lot of potential for unintended consequences.
There definitely is.
With a move like that.
And that's why it's so important to analyze these proposals carefully.
Right.
And consider all of the potential ramifications.
Agreed. It's a reminder that even well-intentioned policies can have ripple effects that we might not anticipate.
Exactly. And sometimes the most impactful changes come from those policies that fly under the radar.
Right.
Speaking of which,
the
article also mentions the possibility of bringing back 100% bonus depreciation.
Now, that's one I haven't heard of. What is bonus depreciation?
Okay.
And how does it work?
Essentially, bonus depreciation allows businesses to immediately deduct the full cost of new equipment and machinery.
Okay.
It's a way to incentivize investment and encourage businesses to upgrade their operations.
So rather than depreciating those assets over time, they can write off the entire cost up front.
That's right.
That sounds like a pretty sweet deal for businesses.
It can be, especially for businesses looking to make those significant investments in new technology or expand their operations.
And I'm guessing this isn't the first time bonus depreciation has been on the table.
You're right. It's a policy that's been used in the past, particularly during economic downturns to stimulate investment and job creation.
So it's like a shot in the arm.
Yeah, you could say that.
The economy.
It's a way to give businesses a little extra encouragement to invest and grow.
Wow, we've covered a lot of ground here.
We have.
From the 9090A provision to the wealth tax proposed, corporate tax cuts, tariffs, and even bonus depreciation.
A lot.
It seems like the new administration is pulling out all the stops to make a mark on the economy.
It does, and it will be fascinating to see how these proposals evolve and what their ultimate impact will be.
Right.
But one thing's for sure, we're entering a period of potential significant change.
Yeah.
And it's more important now than ever for family businesses to stay informed and engaged in that policy process.
Absolutely. Knowledge is power.
It is.
Especially when it comes to navigating the complexities of tax policy and economic change.
Couldn't agree more.
And speaking of knowledge, I think we've done a pretty good job of unpacking these issues.
I think so.
And making them a little bit more digestible.
Right.
Yeah.
We've only just scratched the surface.
I know there's still so much to explore.
There is.
But before we get ahead of ourselves, I think it would be helpful to circle back to something you mentioned earlier.
Sure.
The potential impact of these changes on different types of family businesses.
Yes.
I'm really curious to delve into that a bit further.
Me too. Let's dive into that next.
Okay. So we've talked about a lot of potential policy changes, tax cuts, tariffs, and even how we measure economic growth.
Yeah.
It feels like we're on the cusp of a pretty major economic shift.
We could be.
And you mentioned earlier that it'd be interesting to look at how different types of family businesses might be affected by all this.
Yes.
So where should we start with that?
Well, you're right. Not all family businesses are created equal.
Right.
A small local bakery is going to be impacted very differently than, say, a multi-generational manufacturing company.
Okay, so let's say we take that 199A deduction we talked about earlier.
Okay.
Sounds like it could be a huge benefit for some family businesses. Maybe not so much for others.
Remember that deduction allows owners of pass-through entities
to
deduct up to 20% of their qualified business income. So a family-owned consulting firm
Okay.
or a real estate company structured as a partnership or S-corp
Right.
could see substantial tax savings.
But for a family-owned manufacturing company, it might not be as straightforward.
It depends.
Okay.
While manufacturers can also benefit from the Line 9998 deduction, there are some specific rules and limitations that apply to them.
Okay.
For instance, the amount of the deduction might be limited based on the wages paid to employees
Right.
or the value of their depreciable assets.
So it's not quite as simple as just taking a 20% deduction across the board.
Not necessarily.
And that's why it's crucial for these family businesses to really dig into the details of these proposals and consult with tax professionals
Definitely.
to understand how they might be affected.
Absolutely. And it's not just about understanding the tax implications.
Right.
They also need to consider how these broader economic shifts,
Okay.
like those potential tariffs on Chinese goods, might impact their supply chains
Right.
or their customer base.
Yeah, that's a good point.
Yeah.
But let's talk about those tariffs for a minute.
Okay.
We touched on them earlier.
Yeah.
But I'm curious to hear your thoughts on how they might actually play out,
Sure.
particularly for family businesses that rely on imported goods.
Well, if those tariffs do go into effect, we could see price increases on a wide range of products.
Right.
This could put a real strain on businesses that rely on those imported goods for their production process
Right.
or for resale.
So it's potential double whammy for those businesses.
It is.
They're facing higher costs for their inputs, and they may also have to raise prices for their customers,
Right.
which could in turn impact their sales.
Exactly. And then you also have the potential for retaliation from China,
Right.
which could further escalate the situation and disrupt global trade.
Okay. So trade war, not good.
Not ideal.
It seems like there's a lot of uncertainty in the air right now.
Yeah,
And that uncertainty can make it difficult for businesses to plan for the future.
definitely.
What advice would you give to family businesses that are trying to navigate this whole complex landscape?
Well, I think the most important thing is to stay informed.
Okay.
Keep a close eye on policy developments,
Mm-hmm.
both at the federal and state level. And don't be afraid to reach out to your elected officials and make your voice heard.
Yeah, because they need to know how these policies are actually playing out in the real world
They do.
and how they're impacting the businesses in their districts.
Absolutely. And beyond staying informed, I think it's also crucial for family businesses to be adaptable.
Okay.
Be prepared to adjust your business strategies if necessary,
Mhm.
whether that means diversifying your supply chains,
Right.
exploring new markets, or investing in innovation
Yeah.
to become more competitive.
So it's about being proactive, informed, and flexible.
Exactly.
Not just reacting to the changes, but anticipating them
Right.
and planning accordingly.
And don't forget the importance of community.
Okay.
You know, connect with other family businesses,
Yeah.
share information and learn from each other's experiences.
Right.
There's strength in numbers,
Mm-hmm.
and a supportive network can make all the difference in navigating those challenging times.
I love that it's a reminder that even in the face of all this uncertainty, there's a lot that family businesses can do to not just survive, but thrive.
Absolutely.
And a big part of that is just simply having these open conversations, sharing knowledge and supporting each other.
Couldn't agree more.
This has been incredibly insightful.
Good.
I feel like I have a much clearer understanding of the potential challenges and opportunities that lie ahead for these family businesses.
Yeah.
Any final thoughts before we wrap up?
Just a reminder that we're all in this together.
Hmm?
The decisions made in Washington will have a ripple effect throughout the economy.
Right.
And it's up to all of us to stay engaged.
Yeah.
Ask tough questions.
Right.
And advocate for policies that support the long-term health of family businesses and the communities they serve.
I couldn't agree more. Thank you so much for joining me on this deep dive.
It's been a pleasure, as always.
It has been a pleasure. This deep dive has given me a lot to think about, and I'm sure you at home feel the same. Stay tuned for our next episode, where we'll continue to explore the forces shaping the world of business and finance.